Welcome back. SGX is indicating a strong start. 891 points, 17,852 is where we're at. There's 8 minutes to go for the pre-open session. Sudarshan Sukhani is with us and so is Mitessh Thakkar for a quick technical check on things. Gentlemen, good morning. Good to have both of you here. Sudarshan, how are things looking? I mean, if you do get a 80-90 point higher start, what would you do?
Good morning. See, since last week, I've been consistently saying that we are in a short-term uptrend and we should be looking only to buy. That view continues. Now, there are many people who must be carrying long positions. It is not as if the markets are created every day. It's a continuous process. So for those who have long positions, my suggestion is stay with them, keep a stop under 17,600 and slowly we'll trail that stop. But as far as this today is concerned, this would be a stop loss. Now, for people who have either closed your positions or actually want to take a new position, did not do anything, the gap up is still an opportunity to buy. It's not going to be the same. I mean, suppose you bought at 17,600, you won't get the same yield or profits if you buy now. But buy on an intraday dip, we could be looking towards a target of 18,030.
All right. What about you, Mitesh? Good morning. Do you also believe that this market is perhaps heading a bit higher? In fact, the SGX Nifty is definitely suggesting that. If yes, what are the targets that you're looking at on the Nifty and individual stocks?
So, good morning. One, I think, yesterday also we were of the opinion that we should be buying the dip. We did get, a decline which didn't recover, but the overall intraday setup has improved dramatically. And I think we should possibly look at some traction on the upside today. The gap up would definitely help and possibly propel us beyond 17,800 to begin with. I think once that happens, good chance that 17,980, 18,000 becomes the trading target. So in the short term, the hourly, the 2-hourly chart suggests that we should be trading more with long buys.
Okay, all right. And what about individual stocks, Mitesh? What are you looking at?
Yeah. On the stock side, Nigel, good morning. I have more of buy calls very clearly in line with my opinion that there should be more long trades or buy side trades being taken. So I have 3 buys and a sell. HDFC AMC after a big decline is reversing. So that's the first buy call. Keep a stop around or just below levels of 1885 and a target of 1960 on the upside is what I'm looking at. M&M Finance, I think the stock was buzzing numbers and then a gap up and technically also getting into a uptrend. That's a buy as well. The stop loss here should be around 254 or just below it and a target of 280 can be looked at. And Voltas is a buy as well. It's also reversing after a correction. So this is a buy. It would give a trading rally to about 860 levels and keep a stop below 810 here. The solitary sell call is Jindal Steel and Power. Keep a stop at 567. Look for mild correction pullbacks to about levels of 532.
Okay. Sudarshan, how about you?
Well, the trend is up, so we're looking to buy. Idea is to buy mid caps on strong dips. AB Capital is one such stock. It had a large correction. That correction seems to be getting over. Aditya Birla Capital, I think. So buy with a stop under 139. REC Limited has been a favorite. It's a dividend-paying company and actually has appreciation also. Everything going for it. Small correction is complete. Buy with a stop under 118. Asian Paints is my only intraday short sell. Intraday short sell with a stop above 2780. And finally, that big boy Bajaj Finance is a buy. We've been consolidating for the last 1.5 months and that consolidation broke out yesterday. That's a buy with a stop under 59.55.
Okay, thanks a lot for that, Sudarshan and Mitesh. Let's take a short break. We'll come back with the pre-opening rates. We'll also have Prashant Tripathi of Max Life Insurance to discuss their Q3 numbers. Also, the impact of the budget announcements that came through. So do stay tuned in.
Is your